Let's welcome on board Mr. Sanjay Banka, the CFO at Senco Gold, on the show now. Sanjay, hi, congratulations on the listing and a bumper one at that.
Yes, thank you. Thank you. So it shows the faith and trust of the market in our business value and value proposition that we offer.
And also the fact that you left some, something on the table for the retail investors because it was priced attractively, something to really take home about. But, Sanjay, I wanted to begin by discussing your performance so far. Over the last couple of years, we have seen a revenue growth of around 15 to 16%. Going forward, are you looking at accelerating this rate growth, or this is the sustainable number that you have in mind?
See, we are committed to deliver value creation in long-term basis. So these numbers are just a percentage. We are very clear that we will be benchmarked among the best growth rates in the industry, and we will strive to do that. These numbers, 15 and 20%, they are just indicative. We are promising best of the class value through the growth that we will deliver.
Growth is what you are offering to your investors as well. But talk to me about your expansion plans, because of course Senco right now has a lot more presence in the eastern part of the country. Of course, you're Kolkata based, etc. But going forward, what's the plan to tap into the western or the southern markets as well?
See, we are market leader in East region, and then we'll continue to retain the market leadership in the East region. So the focus will continue to be East and North. Now we are present in South and West. Let's say we have got out of 136 stores, we have 9 stores in South and West taken together. So in the future expansion plan, we will definitely consider South and West as well, because there are opportunities there. But focus will continue to be East and North, because the opportunity is huge. And as the market will be moving from unorganized to organized, we see a good opportunity as the market expands and as the market moves from unorganized to organized.
So the focus will be on East and North, but talk to me about what is the store expansion plan? How many stores do you want to get added, let's say in FY24 itself, FY25, the number of stores?
See, in the past few years, we have delivered around 6 owned stores and 5 franchisee stores. But as we have raised this money for the new store expansion, so this money will be used for the expansion. So we would be having around 15 to 18 new stores, own new stores in the current year, and around 10 to 15 franchisee store. So around let's say 25 stores in the current year and around 25 stores next year. That is the immediate plan, because the funds which we are raising from IPO, out of 405 crore, the 135 CR will go to the SAF, the selling shareholder, and balance 270 crore which will come to Senco. That is good for around 13 to 14 new stores. As we have said that setting up one store require around 17 to 18 crore of inventory and 2 crore of capex. So if you take a ballpark number of 20 crores, it comes to around 13 to 14 crores. So balance will be done from our internal accrual.
Morning, what's the outlook when it comes to your overall product mix, and will you be looking to change it down the line?
So our current product mix, as they call stud ratio, the diamond jewelry is around 10.5%, 11% you can say, and balance is gold and silver. So in future, since as we know that the stud ratio, the market has an average of 15%, and the top players are having up to 25%. So we clearly are looking at the top players for our inspiration and the goal, and we are looking forward to increase the stud ratio by 100 to 200 basis points every year. So let's say by March 24, we look at the stud ratio in the range of 12 to 13%. So that's how is our plan.
Okay, and that 7 to 8% margin, do you think that these levels look sustainable? Would you look to scale up your margins?
So the market is quite competitive, and when you are looking at 7% margin, I think you are referring to EBITDA margin. So what we look at the business is that the gross margin will be range bound because the competition is going to increase in the market. But due to our strategic location of Calcutta, our cost advantage is quite superior. So while the gross margin we are looking at range bound in the range of 15 to 16%, EBITDA margin will improve in future. We are very clear, and that will flow to the bottom line, the PAT margin as well.
Point taken, but given the fact you're talking about the market is very competitive, are you looking at increasing your ad spends, marketing expenditure as well? What's the branding strategy?
See, the brand does not come simply by the ad spend. As we had said that during the COVID year, when the people were closing stores and manpower was being cut, we did not cut manpower, we did not take moratorium. We had cut the marketing cost from 45 crore to 40 crore to 25 crore, and we grew our sales from 2400 crore to 2600 crore. So, and even right now, our marketing spend is in the range of 1.8%, around 80 crore. So, we are not going to increase the marketing spend as such, it will be range bound. What we are going to increase is more value proposition to the customer, new designs, innovativeness, and cost saving. So, as far as the investor is concerned, he will look at better PAT margin and better cash flow. We are committed to deliver the same by our the way of our business model. So the cost saving, the stud ratio improvement, and even our borrowing cost is much in control. The blended borrowing cost is in the range of 6%. So that will all flow at the EBIT level.
Appreciate your time and congratulations there on that stellar listing. Good to interact with you. Thanks so much.